Today is Tuesday, September the 22nd, and there's still a half an hour left in the market today. But Zach reminded me that I had sent a tweet out saying that I had seen something on the Fed Day last week that concerned me a little bit, and I wanted to explain that. But as we're going into today, we're seeing the day at the top end of its range. Looks like it could very well finish, with a hammer type of day, but it's above the cloud. It may very well pull back to the cloud before the day is over. But the Chiku span here is still underneath the candles, and that's a bit of a concern to me. The other thing to note is the McClellan oscillator ended yesterday a little bit higher than its previous low, but when you get something that's this oversold in the McClellan oscillator, you're always going to get a bounce in the positive direction. I mean, it happened here, it happened here, it didn't happen here. Yes, it happened here. It came up and then it pulled back down again, and this was just a sad time right in here. But anyhow, that's what happens when you get these lows. You automatically get a rebound up. So what did I see on the Fed day that caused me to be pretty convinced that the market was heading downwards? And at this point, I still think that the market is heading for a choppy period for many reasons. But the cloud is one, the Chiku span is another, the 8 EMA up here is another, and I'm not sure that we've finished all of our pullbacks. Let's just take a look at some Fibonacci's here, and let's draw one with this low here and this high and see where we are. Well, we've had a 38.2%, a 23.6% pullback, but somewhere in between the 50 and the 200, I still think that there's some down coming. Now, here's what I was talking about on Fed Wednesday. This is a 5-minute chart. This green zone here is the opening trading for the first 15 minutes. So the low and the high of the first 15 minutes form this green area. It's pretty telling. You can just see the day before how the top of that green area was pretty much the high of the day, and also we've got the Woody's pivots here. But this is when the Fed released its announcement, and you saw the market move up. Oh, great news. I mean, the Fed's not going to change rates till 2023. They are committed to propping up this market. And then what happened? We had the rug pulled out from underneath us, and we finished at S1. This happens on more Fed days than not, where good news from the Fed is bought, and then the scalpers come in and drive us down. And then what happened the next day is that we had a big down open, and we've just continued. Whoa, that's too many lines there. So where is our September the 16th? Right here. So we've just continued to move down ever since then, and now we've got 1 day of up. If we just take a Fibonacci, let's get rid of our Woody's pivots now. By the way, Woody's pivots are working very well today. We have resistance at R1. Yesterday we had support at S3. Today we had support at the pivot. Here's support at S3. Just look at the Woody's pivot. Support at S1, support at R1. So look at the daily Woody's pivots. If you're a day trader, they are very helpful. But now we're going to take this Fibonacci and look at this very small wave from the high after the Fed to the most recent low, and what kind of a retracement have we got going at? Now we're at 38.2%, so we would expect to see a little bit of jiggling here. That's all I have to say. I just think that it's still dangerous times ahead. Barry Diller made headlines today on CNBC, or was it yesterday, saying that he thinks that the down isn't over yet, and JP Morgan says that it's still going to be a tough time for the tech stocks. And if you look at Apple today, You know, it's up $1.45 today, but it was up, you know, a couple of dollars. Then it went down and started trading negatively. But you still have Apple took the cloud as support here and bounced up. You know, I haven't made a trade. I don't believe. Let's see. When was the last time that I made a trade? It was when the market was at 3,500. And that was August the 31st. I have not made a single trade in the first 21 days of September, and I see myself staying like this for at least another week.